The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Tiger Technicians Hour. Dow's down 100, S&P's down 7. You've got the comp index down 9. This is interesting. Gold is up about 3. Platinum is down a little bit. High-grade copper's down at 3.33 again. Woo-hoo, interesting. And bonds are up a half a point. Dollar is down a little bit. And the euro is about unch. So, thank you, Steve, for 2 great hours. We have programming all the way through the day here. Thursday, we've got Larry Pesavento comes in after me. Should be a wonderful show today. In fact, with the market the way it is right now, it's going to be really interesting to see how Larry's perspective is turning out and what he's looking at in terms of the different expansions and the butterfly and the Gartleys, because I think we're getting some evidence right at this particular moment, at least I'm getting some evidence, that the bifurcated market is showing up in extraordinary ways. Best Buy down huge. You've got some stocks that have been very weak that are just suddenly spiking, but they are the sexy name stocks, the ones that people turn to at certain moments, like Sarepta Pharmaceutical up 4 or 5 points already today, just out of the blue, just took off. I'm looking at areas like a Wynn Resorts, and I'm saying to myself, you know what? Fantastic. I don't want to step in front of a freight train, but all of a sudden I'm looking at stocks that have the potential to pull back a little bit here. For a few days, I've been looking at Kiwi, however it's pronounced, QIWI, NUS, that's New Skin Enterprises, Jazz Pharmaceuticals, Facebook, that's Q360 Technology, Actus. These are the top stocks in the Investors Business Daily. And boy, when you see the very top start to get clobbered, I mean, look at NUS. Beat me to it. It was on my list of stocks that I thought was topping and would be very vulnerable. It went from 140.50. I'll tell you when that was. 140.50 back on the 13th of January. To my recollection, that was Monday. I remember it well. Let's take 140.50 and talk about the low today. The low today was, now you guess, you're at 140 just 4 days ago, and you have a bit of a pullback. What would you say? Would you say that NUS, New Skin, is down at the 120? Hey, 20 points, that's big. Wait a minute. What if it broke 100? It didn't even stop at the 120, 24, 27 support level. It went right through. You'd say, wow, hey, in a few days. No. What if I said to today's low was 82? A stock goes from 140 to 82. A stock that is number 2 on the Investors Business Daily 50 list gets clobbered. So now let's look at HLF. This has been on my list to short for some time. It made a peak E top in the daily. Let me just move this chart away. Back on the 8th of January at 83.51. It also on that same day had an open, a round number open of 80. That was the high at peak E as the stochastic and MACD turned down. That's a peak D in the weekly. Now, this is the only thing that has kept me saying, well, maybe it's not quite ready. And sometimes this can be a fooler. and that's in the recycle of the day of the monthly chart. There was a Chapman wave Roman candle after the peak G, round number 73 high, back in April of 2012, plunges to 24.24, just above the 9-period exponential 200-period moving average, gets to this, makes this very large Roman candle, Chapman wave Roman candle, doesn't break into the wick of that candle, which is the methodology I use. Instead, it starts to rally above the 9-period moving average, and I've got this now in the strictest way at 88% in the stochastic. MACD is still good, and leg C. There can't be an alternate wave count because it was a G. You can't go H. There's no H's in the Chapman wave, but there is an instant restart, and this could come under the aegis of the unconventional instant restart. This sort of thing that's a little complicated. There's a variation of a variation. You got the instant restart. First of all, you got the restart. Then you got the instant restart. And then you get the variation, the unconventional. It's called the unconventional restart. So I'm looking at this, and I say to myself, if that's an unconventional restart, we could have gone A, B, C, and that could be a D. And that one spike to 24.24 did not break the low bar before a leg D, peak D was made. That goes all the way to 21.17. But that, I don't make things complicated. All I'm saying is, on a short-term basis, this might turn out to be some kind of a heads-up to say, watch out. Herbalife has very limited upside in this particular point. The all-time high was 83.51. It's trading now 73.14, down 6. We might not have to worry about recycles, anything in the monthly, because if you go one step at a time, daily to weekly, you don't have to get to the monthly until many factors are done. And the weekly has not yet gone into a sell mode because we have to wait for Friday at 4 o'clock to see where it closes. And if the price is below the 9-period exponential moving average, even though it's a peak D, I normally, before I put a down arrow, would have to wait for what? I'd have to wait for the MACD to cross negative and the stochastic to go under 80%. That's the rule, and that's the way it is. So that's that. Then I was asked about something very interesting. I was asked a lot of things. Let me go back to my email list. I was asked about Ruby Tuesday. Now, this is a restaurant that I've only been to maybe once or twice, years and years ago. Didn't particularly appeal to me. There's nothing wrong with it. It just didn't have kind of the atmosphere I liked. Of course, I'm a Panera man, so that's probably a step up. However, I haven't been to Panera for a while. So if we're looking at Ruby Tuesday, RT is the symbol, and I'm going to be coming right back. We've got a bunch of callers, so let me just do this real quickly. RT is Ruby Tuesday. The question was that there is a new line of restaurants and people are out the door in the Florida area. What do I think? I have to tell you something. I don't know about that. I know that we've got Shake Shack here in the Boston area, here in the Chestnut Hill area, which is okay. It's not great. I think B Goods, nobody knows about B Goods, but it's a local chain. It's a chain, I don't know if that's the word, but there's a number of them called B Goods. I think that they are far, far superior. However, Shake Shack is the one that gets the name, and then Manhattan all over the show. And there are people out the door there very often. But I have to tell you something. I recommend at $6.05, having made a peak D. Look at this monthly chart. Goes all the way to a couple of peak Ds. Round number high, all-time high, back at 33 in where? April of 2004. Makes the cup formation. Fails at 32.98. Plummets. There's a 1-to-1, and then it extends to the downside. It drops a little. It drops down to 0.85, so it's 85 cents. Runs up again for a peak D at 15.57, January of 2011. That's 3 years ago. And what does it do? It pulls back to 498, makes an H formation. So I said to my subscriber, there's an H pattern in the weekly chart. That is so far a successful H pattern from the left side low of 540 back in the week of the 1st of November. I'm suggesting that he nibbles here, and the whole thing should not be more than 1/3 of what he was intending to have in any case. So start a tiny position here. Why? Because it has to go from the daily chart to the weekly chart, and the daily chart hasn't been able to cross 616, which is the 9-period exponential moving average. The last low was 5.76. It's up 40 cents from there. If it can get into 630, I don't care what the reason is, if it can get into 630, that will say the inverted Chapman wave Roman candle of the 9th of January says you could move towards touching the high, and I would add another tiny position, and this one has a very tight stop. At that point, the very ugly candle of last week is the one that you really have to look at as tremendous resistance. 656 is the number to look at. An eventual close, if there is, not below 547, but above 656. And you're looking at something that says, I have begun a turn that if it continues, could change the daily chart to very positive, the weekly chart to okay, and the monthly chart is still not even in the game. So that's the only way I would do that. I would be very nervous about it. This is not my personal opinion of the restaurant. It was years ago that I was there. I'm just talking about the chart formation and what he said. So I do not want to discourage you, because you might be looking at something that, in fact, is a great turnaround situation. So I would say start a small position, add another very small position, around about the what did I say it was? Around about the 635 level. And if it takes out the high of 645, we're talking about Ruby Tuesday, Inc., restaurants, and also this Lime restaurant, or whatever it's called. And then it'll start to act much, much better. Just tiptoe. Ernie in Dearborn, Michigan. Hi, Ernie. How are you?
How you doing, Basil? You said the magic word this morning. You mentioned the stock that I follow the closest, and that's Sarepta, SRPT. We talked about
this.
We had the double top at 55 and had ratcheted all the way back down and looked like it was going to base for a while. And, stocks like that seem to move. Being a technician, we all look at the charts, but of course we incorporate a little bit of the fundamentals. But these doggone biotechs, sometimes they just happen overnight,
Well, this did how I watched it yesterday. After the close, I saw it suddenly move on the ticker. I saw it going up 80 cents. Then I saw it up $1.20. I said, uh-oh, here we go. We've started another one. Yep. And this is Sarepta Therapeutics. It's a biotech stock, SRPT, trading at $26.95, up $6.97. It moves so quickly that unless you did it overnight, unless you did it yesterday as it started moving at about 5:30, 5:45, it's a tough one. I'm going to be back with Ernie, and we'll see what we can do with the stock.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. The Dow's down 85. S&P's down 580. Bernanke's talking. This is one of his, this must be his last conference. And I just have to say, if the objective of the Fed, which it never really was to boost the stock market, and they made it. They actually said it was what they wanted to do, but that was never the intention of the Fed. Bravo, Mr. Bernanke. All-time highs this week. Congratulations. You did your job very well. Good luck to the next person in line. Ernie, I got a question for you. Do you have any Sarepta at all?
It's a long story, and my answer to you would be is when I look at these things, if you bought the stock at 12, or if you didn't buy the stock, or whatever the circumstances, it doesn't really change my opinion, because see, I'm a technician, and I've been in and out a few times with this thing. I've got 5 or 6 people in it right now that are friends of mine, and the reason that I called is because you mentioned this morning, but on the daily chart, if you look, on the 50-day moving average, we went right up and bumped against it for about 3-4 days and just jumped right above it. Then if you look at the 200-day, using that part of your toolbox, looks like we could go to maybe like a 34. So these are the type of things that I'm looking at presently. I also use the point and figure quite a bit. But to be honest with you, I must admit that I thought we'd drop back a little bit from the 50-day before taking off up again. But it just goes to show you with these biotechs, when the news just comes in, sometimes your hands are tied and you couldn't do anything even if you wanted to.
Well, that was my point. Now, I'm pleased that you say that, I do know that there were people in it. If this is the same stock, I'm trying to use my memory here. This is a stock that had a different name, and it once went from the fives.
AVI Biopharma.
There you go, because it went from the fives down to a couple of cents, in fact. So this
Right.
is split. This is split many times. So we're looking at a $26.83 stock, which might only be $2.68. I don't remember, but I know it's something phenomenal if you actually do the math going back. So I don't care
Sure.
about that. Just like you, I'm looking at the stock. I tell you what, I've been watching it really closely, and it was making the H formation. I too was looking for the test of 17.40. 1729 was the low of the 11th of December.
Right.
And I thought, if it can hold that, that's going to at least give a chance to help the weekly chart. Of course, this is all news-based, and it could very well have done
Sure.
that. So
Sure.
I deal with what we're looking at. Now, this is something very interesting because I can't switch right now. But if you do point and figure chart, my guess is that it'll show you that in the monthly chart, it was just breaking down, and that another big move up, if it continues for a month or two, could repair the damage in the monthly of the. That's just, I'm trying to do this in my head, changing it, switching the chart that I'm looking at from a peak F top to a monthly, as if it was a long-term point and figure. That's just my guess, but this is what I'm really looking at.
Right.
The move today says that for the first time since it broke down in the daily and it gapped down back in the beginning of March, this
Right.
is the first time it's getting close to the 200-period exponential moving average. That puts that into play, and that 200-period moving average, I'm using an exponential. If you're using something different, you probably got, that's why you got 34. I got 29.5. If I use the, let me just check this one. I think that is the 200 period. That's the 200 period exponential moving average, but the 200 period smooth moving average is at 33.86, exactly where you're looking.
Right, exactly.
Right. I like to use the 200 EMA because just have a look at the way it's been so important for the stock. If you use that, look what happened back on the 19th of August. That whole period in August, going in from July to August, that 200-period moving average was support. It was like a springboard. It took off and had this huge move to a peak F-top at 55.61 with what I call the Chapman Wave 2-bar reversal, where the high was 55.61. Very next month, the high was 55.46. Very subtle. Almost couldn't see it unless you used this technique. And then it plunged from there. It went trough A, B, C, D, E, and then it went to an F.
Right.
It went to an F to the upside, and then a trough F to the downside, and then it went peak A, B, C, D. Then, because the MACD was still good, I'm calling that an E, and that should have given you the pullback, which it did. So this spike is B/F. Now I'm going to tell you what I would do. I think it's worth, if you don't mind holding, I'd like to get into it because I know a lot of people look at this stock. I'd like to give you my assessment and
I really
see
appreciate
what
it.
you think.
Thank you. I will wait.
Thank you so much for holding. We'll be back with Ernie in Dearborn, Michigan, looking at Sarepta Therapeutics trading at 27.03, up 7.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, and the Dow's down 87. S&P's now down 5. Now, this is very interesting. Remember yesterday the difference? Now we've got the Dow down 0.53, and the S&P is only down 0.29%. That's the 500 are much stronger than the 30. So, Ernie, this is what I'm looking at. It seems to me, in some sense, that at least the core of your position, you are just buying and holding. So that's the issue. The trading part of it is where I'm looking at leg D in the 120-minute chart, and it says, if this is for real, in other words, if this is going to be something, I don't know what the report is, but if the report says there's an immediate to the potential to put it into production and garner profits. That's, it's not what they say and what's passed. It's how quickly it gets put into production and sold and profits come in. That's going to be if this announcement, I should have actually checked it out, but I didn't. I was looking at other charts in the break. But if that's the case, then I don't think it'll fill this gap for a little while. But if all of a sudden this is just really good news, but it's just back to it being part of the ambience of the stock, the character of the stock is just to have these things come out and then nothing happens. See, I've got a very serious peak, a potential peak F, alternate count in the weekly, an F count in the monthly. The high was 55.61. And the low was down at 12.12. So if ever that was a peak F top, that was it. I don't think it was the C alternate. an F. That means we're starting a brand new move. If this is a brand new move, even Sarepta will be vulnerable when the IBB, the BBHs, when this whole group finally makes its top, and I think it's getting closer and closer to making a very serious top, it'll be dragged down. So here's my thinking. On a shorter-term basis, if your most recent entry point was in the 20s or less, I would definitely take something off right now and say, hey, how often do you get such a fantastic gain, 30% in minutes? That's number one. Number two is, I would want to add to that position with the money that you take off. If this thing pulls back over the next 3 to 5, I'm saying 3 to 5, I'm basing it on the 120-minute chart, not the daily, but the 120-minute chart. If the 25 level holds as support, it doesn't close under 25 for the next into next week, Wednesday or Thursday. Wow, if it doesn't do that, instead it goes towards the 29.59 level of my 200-period moving average. That is really powerful action. So you might not get a chance to put that back. So you think you don't have to do it right now, but think about maybe at this particular point, big gain. If you want to take a little bit off, money management says that's what you should do. But you know what? Common sense sometimes says that's kind of what I should do. And then there's another part of you that says, but wow, now's the breakout. This is the one that's going to take it back to 60 or 50. So I don't want to get in the way of that. You've done very nicely by adding to your position. I'm just saying my way of looking at it would be to take a little bit off, and that little bit would be put back 25, maybe let's say 25 to 24 over the next 3 to 5 days. If it holds that, that's very good action.
Just real quickly, back in August here, we had that low there at 29.71, which falls right around your moving average. And my good friend Bud Rolfe, if he was on the phone with us, I know that he's looking at 30 as being a possible area also. So it's a very
okay. Yeah, I don't disagree.
Yes,
I don't disagree.
You've taken more than enough of my time.
Thank you so much, and congratulations for being stubborn and hanging in there, and great analysis. Thank you, Ernie, for calling.
That's for now.
So, folks, bye, and good luck. So, folks, let's just do Target was the next one I was asked about. Now, Target made a low this morning since the 73.50 high back in July of 2013. It pulled back sharply to the 62 level. And then, what did it do? It ran up in a single leg, 66, whoops, no, in an A and a B, an A to a B minus, and it pulls back from the very last number, which was, in fact, 67.25. From a 67.25 level, the weekly chart has gone to a leg D down. The 200-period moving average is at 59.11. Target is trading right now at 61.02 with a low today of 60.60. So the question is, what do I think? I'm not going to say, are you long, are you short? I'm saying this is what I'm looking at. I've got a peak D in my monthly chart at 73.50. I've got a potential Eiffel Tower, which means it's like a capital A. It goes straight up and then straight down from the low of 58.01 back in January of 2013, a year ago. So this is 1, 2, 3, 4, 5, 6 months up and 1, 2, 3, 4, 5, 6 months down. But it hasn't taken out that low. I'm going to make two suggestions. That data breach was already on its way down. So it's not a positive for, however the result of it can't be a positive for Target. Number one. Number two is, I suspect that I might be wrong about this, and I have no way of gauging other than my instincts being in the business for so long. I think the consumer is kind of tapped out. I'm seeing that the way the automobile stocks are acting. I'm seeing that the way many of the retailers are acting. And if you look at the RTH index has made some kind of a top at peak. Oh, this is exactly the bar that I was looking for in the weekly chart. This weekly chart says that the high of 61.36 the week of November the 29th, is probably the high for the market vectors retail ETF for at least a while. I've got an alternate wave count. That's kept me a little confused in Chapman wave, G/C. I've given C the preference. I'm actually going to change that. I'm giving G the preference. That's going to be blue right there. And all I can say is that I don't have any signals in price confirmation in the monthly chart. I have a lot of signals in my other techniques that I use that say, especially RSI, that says, watch out. The retail index is saying, in fact, I even have to put a down arrow, even though it's not yet Friday. I have to put a down arrow. Look at that monthly chart. It's just been a thing of beauty all the way. I am saying, and I kept looking to find in the retail index, they stopped. There was a 200% short. They took it off. Nobody was interested in it. It's gone. There is no 200 there. Let me know, someone. Send me an email if there's a 200% short or even a 100% short. But I'm saying that retail is in trouble. So I'm saying I would normally have looked at Target if I hadn't got that peak D in the monthly and said, oh, nice bounce coming. Yep, I can see a bounce from 61 to test the 62.5, 63.5 area. I'm saying the surprises could be to the downside. I would not be touching Target. TGT, I'd leave it alone right now. I'd see nothing but a counter trend bounce, but possible red candles with gaps to the downside if there's more bad news. That's that. Now let's get to something else I was asked about. Could I look at, I'll put the 120-minute chart right here. And Target made a peak D in the 120-minute chart, and now it's in a potential trough F/C. So if you want to trade copper, if you're in the den, if you want this as a trade, I'd buy it right here at 61.07. I would have nothing. Today's low is 60.93. I'd put a stop at 60.90. 20 cents, 30 cents, something like that. Why? If it's going to this, if this Chapman wave Roman candle is to be successful, it must not get to 60.81. If it touches that, it's going to test the bottom. But if in the next 3 days it pushes high, if at any point it closes above 61.55 on the daily chart, that's a good test. And that can give you the counter trend bounce. I'm just saying, if you have anything more than a shorter term trading aspect to it, I wouldn't touch it. But if it is short term, a bounce of a potential 1.5 point bounce with a 20-cent stop, wow, that's a nice risk reward. But that's the way I'd look at it. Next thing, let's just do this. Google. Oh, we've got Brian in Jackson, Mississippi. Hi, Brian. How are you?
Fine, Basil. Thank you. I normally don't go after or look at lower price stocks, but I wanted you to take a look at Thompson Creek, TC. I tried to get into it yesterday 3 times, but I never could.
It's just so funny that I don't know what's going on. The last week, I've been putting up stocks that I see through the ticker. I always have the CNBC for 30 years or more. I, in fact, used to be Tiger. No, it wasn't Tiger. It was the Financial News Network, something like that. And before it was taken over by CNBC, and I used to give a daily call to the local affiliate here in Boston. So I've watched the ticker for years and years, usually with the sound off. And I've had so many stocks that I'm looking at. And then the very next day, somebody calls in. Last night, I was working on EW, which is Edwards Life Sciences, and I did all this work. And then suddenly, I see that Kramer's interviewing the CEO. I didn't actually listen to what was said. So I thought, there's that bounce. So it's off my list at least for now. This has been happening over and over. And so here you are. I did TC because also I saw it go by on the Cricker. Thompson Creek Metals Company. I don't know what metals they do. In the 120-minute chart, it's in A, B, C, D, E, peak E, being made right now if it doesn't make a new recovery high today. The daily is in leg C, and the reason why I looked at it and then I said, hey, you know what, I'm going to do the notation, is because it's trading at $3 right now, up 11 cents. TC is the symbol, and it had a really, I saw it before, it made the spike up to the 200 period moving average of 3.06. Do you have any position at all?
I'm looking for an entry point. I tried to get into it 3 times yesterday at different levels, and it kept going up, and I didn't want to chase it too high. And this morning it opened up around $3, and I just don't know if it's, is this a legitimate breakout or is it going to?
Okay, I'm gonna do two things. One is I'm gonna tell you that the stock in the monthly looks just, well, you probably know that because it looks just terrible. I haven't got a chance right now to do the monthly chart notation, but it looks to me like it has gotten, it did an A, B, C, D, E, F to the top at 2709. And that was back in 2007. And then it just plunges to the 200-period moving average, bounces up to a peak C minus, and comes plunging down. So the monthly chart is very poor, but it's a nice candle for January, inside candle. Thompson Creek Metals Company, thank you, Gringo, engages in mining, milling, processing, and marketing of molybdenum. Oh, molybdenum products in the United States and Canada. I bet Dave White also knows, because he's the guy, I think, introduced us all to that particular commodity. So, okay, here's my thinking. If you're looking at the monthly, if it's going to go to $4, you can buy it at any price. We don't know that. So we look at the weekly. The weekly's had its best move on the upside since even better than the spectacular candle of May, the week of the 10th of May of 2013, with a low of 299 and a high of 394, almost $1. And this week alone, it's gone from 218 to 311, and that's almost $1 right there. So that makes it a little risky, and it looks to me like either they've got something going on that's really positive, or it's a news-related thing, because it does have these spikes as news-related. Here's my thinking. I'd like you to take a moment, just do a little bit of fundamental work, and just search out the news to see what the story is, if there's anything going on there that you should know about that is positive, that isn't just a news-related story that has to do with forward-looking results, not backward-looking results. That's number one. But on a purely tactical basis, I think that this is going to go to 318 to 321. The last high peak was at 322. That was back on the 13th of November. So I'm going to make the suggestion that you have a little bit of patience and say, I'm either going to miss this or I'm going to get it. If I get it in leg C, I have to get it in the 285 to 287 area with a reasonable stop, because it's such a low price thing. Rather have it as a small position, number one. And if you get it in the next day or two and it confirms a peak C, the moment it crosses the high of today, if today's high of 311 gets taken out for leg D, consider the 200-period moving average, which was tremendous resistance. It was support, then it became resistance, is going to be back in play, and this thing could chop around between 325-ish and 275-ish for 2 to 3 weeks as it builds support, if it's going to break and use the 200-period moving average as a springboard, and that could take it to the 348 level. That's really high up, but that's the left side peak that I'd be looking at, the high of the week of October the 25th. Now, the only other thing I'm going to say to you is this. I would start a small position on that pullback. If it shows, if you get it, and then it strengthens, it goes to 301, I would add another little bit, and that's my trading position. And if it breaks to new highs, the trading position, use a trading stop. Try to keep the call. And let's see this and see what happens again. Let's look at it Monday or Tuesday, okay? Good luck,
Sounds
Brian.
Good. Thank you very much. Appreciate
Thank you.
it.
We'll be back, folks, straight off this with Pete in Melbourne, Florida, looking at GE. Dow down 70.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Yes, this is the Tiger Editions Hour. Last little segment, we're going straight to Pete in Melbourne, Florida. Hi Pete, how are you?
I'm doing well, Basil. How about yourself?
Okay.
Okay, now here's the reason for the call, and I know you told me to stay away from GE, but they report earnings tomorrow, and I wanted to know if that changed the outlook.
You know, every single day I looked at GE and I kept saying, all right, I want my subscribers to get the best out of this, and I'm also looking at Pete because I feel upset if I'm going to give a buy signal. I don't know how to tell Pete about this. Okay. I did not get it. I tell you what. I'm upset with myself for just one reason. When it went to 26.68, the low of the 13th, I should have nibbled the next day and said, you know what? If it rallies from here and then gives a bad report, all that'll happen is it'll take me out by maybe 20 cents if it plunges. But if it's successful, I'm in at a really nice price. Well, the difference between 26.70 and 27.15, where it is now, is so little. if this thing is going to be successful. Now, I don't know how you feel about it. In fact, I was even thinking about it this morning. Should I do the same thing? Well, we do have some stocks that are doing very well in my portfolio for my subscribers, so I felt comfortable by saying, you know what, we're doing okay. I don't want to be too long right now because I'm beginning to sense that I must start to look at shorts again. This is my thinking. I don't know how you feel about very short-term trading, but if you feel that if GE was to pop up tomorrow 65 to 70 cents to try to test and break 28.09, the previous recovery high, and you don't want to miss it because after that it'll be tough to get in, then I'm going to say to you, with a risk of 50 to 60 cents on the downside, then perhaps just put your foot in with a small position and say, at least I'm in. That's number one. Number two is, what if there is good news? Well, if there is good news, it's going to say, you know what? GE is in play. It should retest the previous high. If it breaks the previous high of 28.09, it'll either be leg F or a brand new leg B. But if the MACD turns back up and the stochastic remains in the mid-80s or goes towards the 90% area, you can even add to the position. But if you don't have it at all and it spikes up, you've lost about a point and a quarter, point and a half, and it means that you will be getting in, but your risk is now a little bit greater because it could be a news-related thing that says, oh, it's good news for now, but now GE is getting a little overbought on the shorter term. So my thinking here, and I know that you're really looking at this as a position play, I'm going to make the suggestion that if you're prepared to just get a small, your foot in the door, to have it there, and say, you know what, if it drops a point, it's only a small position. I'm sure it'll bounce back again to make it 50-cent loss instead of $1 loss, or even 30 cents or 20 cents, or even come back to 27.16. But if it breaks to the upside, I'm at least in it, and I feel that I'm in a position to think about adding. And then next week, I'll be looking at it in greater detail. So think about what you want to do. All I can say is I don't have any signals in the monthly chart to say that it's a sell, but the weekly chart, the technicals are starting to slide, and it's saying that if it takes out the low of this week, 26.68, it could very quickly test 26.20 and then go into the 25s. That's my only concern. If it's very good news, and you can see the banks have had mixed news and they're responding very differently, GE is like in a different ballgame completely. So I'm just going to say, think about it. You might want to just nibble here, small position, at least to be there. I'll be looking at it in greater detail next week. Hope that helps you, Pete.
It does help. Thank you very much, Basil. Appreciate it.
Thank you very much for calling. So, folks, watch the Dow, the 16,370 level. That's really, if it closes under that, I'd say be a bit careful. I still see a little bit further to go on the upside. Stay tuned.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.